Hi, everyone. Today I'm here with my friend Deepa. She is a CPA, accountant, amazing. She knows everything and she's going to answer all of our questions today. So I'm going to let her introduce herself here in a minute. But for those of you who don't know who I am, I'm Carla Titus, founder and CEO of Wealth and Worth Within. We've been doing business consulting for over 5 years, helping business make more money, keep more money in the bank, pay themselves more, and making sure they're not avoiding taxes. So that's why I brought my friend Deepa here today to tell us all about what to think about your business when it comes to taxes and being compliant, and also all the fun things about why we should be paying taxes in your business. So I'm going to let her introduce herself and then we'll get right into it.
Thank you, Carla. I am so happy to be here with you because I know we talk about the similar things. So I'm really happy to be doing this with you. Hey, everyone. My name is Deepa Ramachandra. I am a CPA. I run my own traditional accounting firm, and I work with a lot of business owners. And my primary job is to help them run streamlined businesses where they're doing things right for themselves, with the government, in their business, and make sure all the boxes are checked and things are going well. So yeah, I'm really, really happy to be here with you today.
That is awesome. And we need all of that knowledge in our businesses to make sure we're running, compliant, we're paying our taxes, no audits over here because we got the right help on our side. And if you have not hired a CPA or accountant, probably sooner than later is the best. You don't want to wait till tax season to be calling them. They're too busy. They're probably not going to take you as a client. So be thinking about that at this time of year, which is actually a good time. It's kind of halfway through. If you haven't done your bookkeeping, get caught up on it and then start getting advice from them and direction on where you want the year to end versus like waiting for it to happen to you. Because we're all about being proactive around here in financial planning when it comes to doing the work that you do in your business and making sure you make money. So with that, I want to talk about what I hear a lot with business owners is, hey, do I need to be an LLC? Do I need to be an S Corp? I don't want to pay taxes, so make me an S Corp. Let's just kind of talk about what the entities are, who should be using them, and why would want to be one versus the other.
Yeah, awesome. So this is my number one most asked question. So I'm always happy to answer it because this is a resource, right? And we can always send people to say, hey, listen to this because I've already answered this question. So there are only two types of entities, only two types that you set up legally. And I'm not here to talk about legal, so I'll just go over that real brief. One is an LLC and the other is a corporation. And those are the only two recognized corporate structures. From a tax perspective, there's a lot more. Okay, so you can be like a C Corp. It's you generally those bigger companies that pay taxes. Then you can be an S Corp, which is more suited for our population of smaller businesses. And then you have what's called a partnership, which is more than one person joining together to run a business. Mm-hmm. Then you have the all famous LLC. And the only issue with the LLC is that there is no LLC tax return. Okay. So the LLC is a nice, flexible structure because legally you're recognized as an LLC. But from a tax perspective, there's no such thing. So you have to figure out how you're going to pay taxes in your LLC. And the beauty of it is you can pick, you can be LLC taxed as S Corp, or you can be LLC taxed as C Corp, or you can be LLC taxed as partnership. The thing with this is, I personally am not a fan of someone running off and setting themselves up as an LLC and then filing that S election and then coming to me, because we've lost a big opportunity here. Because I like to talk to my people. Sometimes choosing to be a C Corp is probably the best structure because with a C Corp right now, you have such substantial tax advantages. It's at the lowest tax rate it's ever been. If you're in the right industry, you can sell your company and pay no tax. I mean, I can't tell you how wonderful that of a structure that can be in the right industry, right? So definitely don't rush to set up the standard thing that you heard from your neighbor or from your dad or from your closest friend. Talk to a professional, talk to an attorney and get their advice on the legal structure. Then talk to an accountant, get their advice on the tax structure, put them both together, and then make a good decision for you, because you never know how much money you're leaving on the table by rushing into something.
And this is why we hire the professionals, because this is where it's worth it to pay someone to tell you, based on your personal particular situation, what would be the best option for your business, for your tax return, to save taxes and, pay your fair share. We're all about that here because we're making money, therefore we're paying taxes, but making sure that they take into account your comprehensive picture, not just what someone said on the internet that you should be doing, and then all of a sudden you're doing it and it's the wrong approach for you. So go hire that CPA to tell you what is the right way, and understand your situation and evaluate it and give you the best proposal for what's going to work best for your business. So I'm so happy we're talking about this, because so many people are just going for the sexy thing, or like the new thing they heard about, and their neighbor, who maybe is a business owner or not, is telling them what to do.
So that neighbor, I heard this from my neighbor, it really upsets me, because that's not the person you need to be taking advice from, even if they're an established business owner, right? Because they don't know the latest thing. So the latest thing is now your 401k can own a business, and you can run an active business that your 401k can own. So when you sell it, everything goes back into your 401k. It's true. It's a fabulous structure. It has to be done the right way with the right people running that. Otherwise, it's considered a distribution from your 401k. You're going to owe taxes on that money. So that's what I said. A lot of people know enough to be dangerous. Always just make sure you check in with the right people, so you're doing the right thing for you and for your entire family and your future.
Because once you make a decision, those are very expensive mistakes that we as experts are trying to help you avoid. And that's why you pay us money, right, to work with us. So just be mindful of who you're getting advice from, and which advice you're taking, from the right people that know what they're doing and have been doing this for a while. With that, I want to shift gears into a little bit of why we should be paying tax. We talked about, hey, if a business is making money and they're profitable, we want to be writing checks to the IRS. Just like when you are an employee and you get a paycheck, they take money away for taxes automatically. We just have to do it manually ourselves. So now we think it has to behave differently, and we're willing to not make money in order to avoid paying taxes. Let's just kind of get into that, because I have a big pet peeve with that. If you're going to have a business, it better make you money. You should be building wealth, and you should be paying yourself a market rate. Otherwise, just go get a job, because it's not worth it. So tell me more about, like paying your fair share of taxes.
Absolutely. So if you are privileged enough, and today privilege is a big word, right? It's a big in word. If you are privileged enough to be earning money, to be paying taxes, you're probably, I think, like the top 5% in the world. So first of all, I would just consider, check your privilege. Know that you are only paying taxes on income, which means you have enough income to pay the taxes. I won't go so far to say be grateful for it, but I would go so far as to say you're in the select few who makes enough money in order to pay taxes. So that's the one thing. The second thing is, taxes are always only a percentage of what you earn. Invariably, you have deductions. You have a lot of credits and deductions you can take off of your income before you get to what's called taxable income. And even then, there's other things that you can subtract once you've calculated your tax. So really, when someone says they're in the 32% tax bracket, it's not 32% on all your income. It's not that. We pay tax in brackets in this country. So the first 60,000 of income, you only end up paying 10 to 12%, which is not such a bad thing. So make sure that you know that, or you at least internalize the fact that it's only a small percentage, okay? And then the third thing is, like Carla said, profit. To me, as a business owner myself, I know to you, Carla, as a business owner, and we're talking specifically to other business owners at this point, you've got to make profit, right? Your business is there to earn you a profit, to better your lifestyle. And the cost of that profit is a percentage in taxes. That is, I personally, because I was born in a third world country. I was born in India. I came over here. So in this country, we take way too many things for granted. We take for granted the fact that you can turn a faucet and you know water will come out, or you go out and you know there's a road that's going to take you from point A to point B, or we don't even think about those things. And a lot of those things get paid with our tax dollars. I know there's a whole other equation to that. Are they using the money properly? It doesn't matter. We live in a first world country where taxes fund our infrastructure. And so I'm a big fan of paying your fair share. So now the contra to that, people will say, yeah, well, Jeff Bezos doesn't pay taxes, or Zuckerberg and Warren Buffett don't pay taxes. Okay, listen, we're not them. Okay, they have built billion-dollar companies. With a billion-dollar company comes billion-dollar tax breaks and billion-dollar advisors. We're not that. Okay, if we're going to work our way there, wonderful. You can. At that point, you can get loans on the stock that you hold, and you can live off of those loans. That's a whole different lifestyle, and that's a whole different sort of way to do things. For us, the 80%, okay, the 80% of America who are small businesses and wage earners, this is the best you do. You earn your money, you take as much legal deductions as you can off of it, pay your fair share of taxes, and then move on.
And that's why you work with an accountant, to ensure that none of those deductions are missing, to ensure you're not paying more than your fair share. But we do want to be paying taxes, because that means you are making money and you're probably paying yourself as well. So why wouldn't you want that for your business? We're all about profit around here. So in order to, keep some of that money that we make, which is the majority, by the way, of what you earn, it's just that there's this portion you need to take for taxes. And, planning for that helps you get out of the mindset of like, oh my God, this is such a big burden. It's like, no, you knew it was coming. Death and taxes, they say, is the certain things in life, right? So let's just plan for it and get it out of the way. So then when you're spending money or investing on stuff, you're not taking the money that you would have sent to the IRS for taxes. You just already put it aside. That's what we do with our clients. Just put it aside, out of mind. And then you send in your quarterly payment and everybody's happy. We don't even have to think about it or talk about it anymore. Moving on to growing our business and making more money, because that's what we're here for. Awesome. Well, I want to get a little bit more into some of these common myths that we've heard with business owners and entrepreneurs of like, oh, I have to write everything off so I don't have to make money, or I don't have to pay taxes, or, hey, I should buy a car, even though I have an online business and no need for that. And I know that's the big one because it's really hot right now. And, I just want to start to debunk some of those myths, because they do not serve a purpose. Anything you invest money on in your business should give you a return on investment, ROI. And if you don't understand what that benefit is, or you're not getting that benefit, you should reassess whether or not you're spending your dollars in those places. So let's just kind of go through a few of those. I know buying a car is a big one, so I figure I bring it up, but any others that you heard of?
Yeah, so I wanted to start off by saying just last week, this person reached out to me from nowhere. I get people just reaching out to me through my website, booked a call with me, got on the call, and basically started asking me a bunch of questions. And I always want to know, where is this headed? Like, what is your ultimate goal, right? So I'm always trying to get to the bottom of that. So after about 15 minutes into the call, he goes, okay, the only reason I reached out to you was because someone told me I need to set up an LLC and I can write off a car. So that's the only reason I reached out. And so this is like my pet peeve. Like, I will start ranting on this, because no, you cannot just buy a car and write it off. That's not okay. And this person was he was working remotely and in the IT sector or something like that. So zero purpose for a business card. First of all, you don't even have a business. So you're just going to set up an LLC for...
You haven't made a dime yet.
Yeah.
Because you're not really selling anything or doing anything to earn money.
There's no valid business here. Or were you trying to create a business or something? So there's no valid business. But someone told him to just write off a car. So these kind of things, this is why the government starts cracking down on things, because you legally don't have any basis to write off a car, right? So first of all, I want to make sure that you have a valid business, and then inside of that business, are you in a driving situation, right? Now, with all this remote work, most people are not even using their car 50%. I won't even consider a car as a deduction unless you're using that car 50% for work. So commuting miles don't mean anything. So you have to literally be driving a lot for work. If you're not doing that, I am not expensing your car. I'm going to say, take the mileage, keep track of your mileage, and we'll write off what the mileage is, right? But I'm not going to let you buy a $60,000 car and suddenly take a $60,000 deduction on your income tax. That's a huge red flag, and IRS is going to come knocking, and I'm not about to let you go down that way. Okay, so that's one thing. Other deductions, like the home office, is another big thing. Can I take a home office or not? And now with all this remote, that was the second most often asked questions, because everyone's working remotely. Well, you have to have a business to take a home office deduction. You cannot be employed for somebody else. You cannot be working for someone else and take a home office deduction. Unfortunately, that went out with the 2018 tax law. Okay, you must own a business. And within that business, we have to meet a lot of different criteria. Are you using it as exclusive space? Now they've started a few more home office audits. So what that means is they are looking for you to exclusively use it. So if you're just using a part of your family room, it's a no-go. You have to have a dedicated space where your kids don't come in, or your spouse is not using the other half of that room to store stuff. No, exclusive use. So our job as professionals is to make sure that you meet these. I'm not telling you that I don't want you to get deductions. So this is something I have to encounter quite a bit, right? Like, why are you saying this is not going to work? Because it's not going to work. You haven't met the basic criteria, leave alone the entire criteria. You're not meeting the basic criteria. So we're both signing the tax return. When there's a return in front of us, I'm signing it and my client is signing it, right? That means we're both on the hook for the accuracy of that. I'm not going to let you go down. You can't let me go down. So that's what I want to do for my clients, is ensure that when we're putting something on the return, that they can sleep at night and I can sleep at night too, right? So
yeah. And that's why they seek advice from experts, is to be able to guide them on the path that is less risky, it's meeting all the criteria, it's checking all the boxes, so that you don't have to worry about whether or not there's an IRS audit coming, or what happens if, because you're covered. You've already been taking care of all those things for them, so they can sleep at night. And even if IRS comes knocking, it's not a big deal. You got everything under control. It's totally fine. But if you're following this advice, it's just hot out there from social media or wherever, from people who don't really know and explain the context of where this advice is coming from, that's when you could get in trouble. And we're trying to save you the headaches, the money, the risk, all of those things, avoiding that from a financial risk perspective, both from a CPA perspective, from the tax side, as well as a CFO who's looking at the holistic strategy for the company and the direction we're taking as we grow and continue to profit more. All these things become second nature, because we have the right expert on the team to help answer this question. So if you're looking for a CPA to support you, or a CFO to help you grow your business over time, make sure that you reach out to us. Deepa, I'm going to let you go first, and then I'll wrap it up with where they can find me.
Oh, sure. So you can find me on Instagram, deepa.ramachandran, or you can find me on my website, www.acumencpa.com.
Awesome. And I can be found at wealthworthwithin.com for fractional CFO services. If you're ready to have done for you financial support in your company and you want to be more profitable, pay yourself more, or put more cash in the bank, it's time to call us. Make sure you have an awesome CPA by your side already, because we partner with them to make sure that everything is taken care of. You could also follow us on LinkedIn, Facebook, and Instagram at wealthworthwithin. We put out a lot of free content and resources to educate and empower you on how to have a profitable business. And let us know in the comments how else we can be a resource to you. We love to answer questions, and then just know what's on people's minds as you're growing your business. It can be a little lonely, so we want to make sure we're here for you, supporting you. Thank you so much for being with us today and this valuable insight and time that you provided us. I'm sure a lot of people are going to watch this and love everything we shared today.
Thank you for having me. It's a pleasure.